But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Tuesday, April 11th, 2023, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at Britain's obsession with house prices. Yes, and it's been going on for about 25 years, I would say. It's the talk during dinner parties, barbecues. The Daily Mail mentions the value of people's houses when they're doing a story about them. But I'm going to show you that it's just the rising house prices we've seen in this century is just a mirage of wealth. And before I start, though, I'm going to reference a pocketbook of gold by Jim Sinclair. And I think it's getting harder and harder to get this book. Jim Sinclair's website has closed down. But this will help you understand why gold is so important and why we're going to compare UK house prices to the gold price. We're going to look at the nationwide house price, average house price to gold ratio today. But first we need to go through this. Gold is a revealer of falsely stated wealth. When wealth is overstated and expectations for future wealth are unrealistic, fiat currencies depreciate. The depreciation is borne by the citizenry who are forced to lower their living standards to compensate for both personal economic mismanagement as well as the mismanagement of the affairs of state. Financial and military overextension has a social corollary in overpromised social security, Medicare, well in the UK read NHS, overstated real estate equities affluence. As expenses run out of control, guarantees to the citizenry also explode as politicians seek to retain the privilege of office. Well, we're seeing that in spades in the UK in the last few years. But the promises of wealth are false. The belief that ownership of real estate is a ticket to fortunes is hollowed out for what it is, a myth. Wealth that was taken for granted suddenly appears ephemeral. The amount of currency which one bought certain things no longer does, but wages have not risen along with prices. Instead of wealth, citizens get saddled with a big chunk of government debt, i.e. debt created by mismanagement. The result is everyone pays more for food, fuel, and other necessities. So, yeah, and this has been happening in the UK and other countries. The reason why I'm talking about the UK is because that's where I live. So let's keep going. Government passes on the mismanagement of economic affairs to its citizens by devaluation. Yes, and it's not just the conservatives that have been doing it. It has been happening also under the previous government. It's not because of Brexit that we're getting inflation or a lower standard of living. As the imprisoned money manager Martin Armstrong has artfully stated, the decline in the value of a currency is in reality a free market tax taking away wealth that is overstated. So currency can also be an indirect tax to compensate for the poor management of the state. The corresponding rise in gold, especially when it is a global phenomenon, as it is now, is in effect a devaluation of all the world's currencies and the restatement of wealth on a global scale. As is both presently and historically evident, the attempt to restate wealth to a lower level becomes a competitive event in its own right as nations fight to devalue their currencies against each other to reduce the burden of indebtedness. It should be recalled that when FDR lowered the value of the dollar vis-a-vis gold in 1933, America was the 9th nation to do so in a 3-year period. Falsely stated and assumed wealth, largely created out of the assumption of debts that cannot be borne, must eventually reset at a lower level. Populations bear the restatement of wealth through the expansion of monetary aggregates, causing a devaluing of the national currency that denominates their wealth. There you go. It's the British pound, the fiat currency, that denominates house prices. This happens to all currency holders, regardless if they personally assumed any debt. Gold rises because gold is a monetary proxy inversely related to a nation's currency. The burden of indebtedness is reduced along with the standard of living. Commodity prices increase. Debt deflation has become currency inflation. They're one. So there you go. So let's quickly go through this little presentation I did here. You can see the growth in UK public debt since 2000. So as I said, it's nothing to do with a certain party. It's the whole political class that is doing this to us. So we've gone from 307 billion to just under 3 trillion, as you can see. That's an almost 900% increase, or a 10.12% annual compounded growth. So that's why our currency is getting devalued. How have they been able to keep this going, to keep house prices high? Well, if you look at the Bank of England base rate here, the purple line, usually savers get rewarded for saving. They get a real rate above the rate of inflation, through which I've taken RPI here. But as you can see, since the '08 crisis, that real rate has been negative. Prior to that, investors always got something in return. And what has that done? Well, that's made sure that the currency is devalued here, because as you can see, as the real rate became negative, the price of gold has taken off. House prices have taken off as well, as interest rates have been pushed lower. And how have they done that artificially? Well, they've done it through money printing. The Bank of England balance sheet, their assets have grown from under 100 billion to about 1 trillion. So the government borrows and the Bank of England goes into the market and buys gilts to keep investors going into gilts, because the more the Bank of England buys, the higher the price goes, the lower interest rates go. Yes, recently they've had to increase interest rates because they've lost control of inflation. But as you can see, the rates are still way below the rate of inflation. RPI is around 14% and our base rate is around 4%. And they're talking about the fact that, the Bank of England and the IMF, they're saying, oh, this is going to end. This is just a blip, right? Well, it's because they want to keep inflating. So now we're going to look at the part that is getting more interesting. It's the comparison between the gold price and the average house price. And in this case, I've taken the nationwide average UK house price. Data goes back to 1952. But I've taken it since the year 2000 here, these calculations. So gold in the end of year 2000 was at £179.61. Yes, that's not the sovereign, that's per troy ounce. And at the end of 2022, we were at 1505, 1,505. I know we're higher now, but I'm using end of 2022 numbers so you can have an idea what's been happening since 2000. Total return in gold has been 738%. So I would actually say that that's the real rate of inflation, the 9.68% annual compounded rate growth of gold. Because as Jim Sinclair said, gold is an inverse proxy to the national currency. So what has the nationwide average house price done? Well, it's gone from just under 75,000, as you can see, to 265,000. Total return has been good, 255.3%, but the annual compound rate is nowhere near the devaluation of the currency. What's the devaluation of the currency? Well, that's how much gold has gone up, as you can see. Gold has outperformed by 4% since the year 2000, over 22 years. So now we're going to look at the nationwide average house price to gold ratio. And the first time I looked at that was with a friend of mine at work. Even before the '08 crisis it was, when I worked at Ment Financial, which eventually became MF Global. We looked into this ratio, and basically this shows you how many troy ounces of gold one needs to buy the average house in the UK. So the extremes have been 1982. That was probably the best time to buy the average house price in terms of real money. You only needed 90.87 troy ounces. And the year where house prices were the most overvalued versus real money was 2004, when you needed 672.09. So that was probably the best time to sell real estate and buy gold. And I went through also the average weekly wage, and this shows you how young people are getting really decimated in terms of their purchasing power, in terms of their wherewithal to maybe buy a home, get on the property ladder, as it's called. So you can see the average weekly wage in 2000 was 298. At the end of 2022 was 588. So the compound growth has been just over 3%. And if you look at the compound growth in the price of gold, 9.68%, you can see why young people as a whole have a very difficult time in getting off the ground because they've inflated our currency. They've devalued our currency. Of course, people who were lucky enough or fortunate enough to have gotten into the property ladder prior to the late 90s, I would say, they're doing well. But as I said, it's just a mirage of wealth, because if you sell your house and you're going to buy another house, unless you move to somewhere where it's a lot cheaper, somewhere far away, maybe in the country, you're going to be paying the same thing. So it is a mirage of wealth. So before we finish and look at the markets, I just wanted to go through some scenarios here about the possible scenarios on what's going to happen to UK house prices relative to the gold price. So the first scenario is house prices remain unchanged and the ratio drops to that 90.87 that we saw is the lowest since 1952. Well, the gold price would have to be just under 3,000, as you can see here, 2,918.4. The other scenario is going back to 2019. Why 2019? Well, because we know what's been happening since 2020. The national debt has gone up through the roof. We've seen the currency getting devalued even more, or i.e. inflation. So if we go back to that 215,000 average house price and the gold price remains unchanged, that ratio drops to 137, which is still, compared to the 90.87, still, I would say, overvalued. And then if we go back to the '08 crisis, or to 2008, and house prices drop to that amount and the gold price remains unchanged, yeah, the ratio will drop to 98. So that's better. But let's say, and I'm not trying to say that house prices are going to collapse. They might even keep going up, and I think they might in nominal terms, not in real terms. And that's what I've done here. So in 5 years' time, from the end of 2022 to the end of 27, is if house prices keep growing at the rate they have been since 2000, which is 5.67%, the average house price would be at 349,401. And if the gold price also rises at the rate it has been since 2000, well, gold would be just under 2,400, and the ratio will only have dropped to 146.25. So that's probably the way they might do it, I think. But let's keep going. Let's say that at the end of 2027, house prices keep growing, right? It's a mirage of wealth, as I said, but the gold price actually goes up to 3,771. Well, that means that that ratio drops to the historic low. So that's an interesting one. And I've taken also that ratio to go through. And why would it go through that 1982 low of 90.87? Well, because I think the move in this century the moves have been extreme. We saw it go up to like almost 700. So why not correct through the average? So if we go to 75, that ratio, as you can see, and house prices keep going up at 5.67%, the gold price would be at 4,569. And then if we get an extreme collapse of the currency, and by that I mean a collapse of all fiat currencies versus gold, and house prices keep growing at 5.67%, we'd see gold at 6,800. That ratio would drop to 50. And I think I might be comfortable with maybe hoarding some of my gold to maybe buy some property in the UK. So there you go. That's why, yes, they're going to keep doing everything to keep the fiat price of houses like a semblance of wealth. After all, a lot of mortgages, they're assets for a lot of the financial institutions. They have to keep it elevated. They have to keep rates low. Whether they'll succeed in doing that is another question, but I think they will succeed, but they will succeed in destroying the currency, and that's why you should not be fooled by the value of the house prices in British pounds. It's a mirage of wealth. So there you go. I hope that helps. This, of course, is not advice. This is just to give you an idea of what the real value of houses are, in my opinion, relative to real money or gold. So with that, let's quickly look at where the markets are this morning. It's 8:45 a.m. London time. We've got gold, spot gold at 2003. The high's right around here. The low has been 1988. Silver is trading at 25.05. It's up just under 1%. High's been 08 and the low's been 24.80. The stock market, the indices, the futures are pretty much unchanged, so I won't go through them. To the currencies, sterling is up 0.4% versus the dollar, 124.34. The euro is up just over a third at 109.01. The dollar is down 0.5% versus the yen, 133.06. The dollar is down slightly versus the yuan at 688.72. Aussie dollar is up 0.5% at 66.70. The dollar is down 0.15 versus the Canadian dollar, 134.87. And the Kiwi dollar is up slightly at 62.26. To the commodities, we've got platinum up $5 at 1,005. We got WTI crude up 0.75% at 80.35. And we've got Brent crude up 0.6 at 84.52. And we'll finish off looking at the bond markets. The 10-year yield, U.S. Treasury yield, is down 1.5 basis points at 3.4. The 2-year is down 2.3 basis points at 3.98. To the UK gilt market, we got the 2-year yield up 8 basis points at 3.44, and the 10-year is up 7 at 3.50. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.